Good afternoon. Welcome to Green Bicep. It's 2023. Is the sun out? The sun out is out for me. So what should we do in 2023? Are you going to the beach? Let's talk stocks. Let's talk bonds. Let's get into it. Signal from the noise. Green Bicep. What not to do? So it's all about planning, right? You want to plan for your future. Don't think too deeply initially. Just sketch it out. And then once you start to sketch it out, you could lay out timelines. I love this calendar. You could see the full year on one piece of paper. It's a pretty powerful thing, something I would highly recommend other folks to consider. So what not to do in 2023. Number one, allocation size. For new investors or all investors, your allocation size is key. So the 5, 10, 15 rule is key. 5, 10, 15. So that means once your position size is over 10%, start to scale back. If it hits 15, the alarm should be going off. This is what the professionals do, most of them. 5%, you scale in under 5%. And so look at 5, 10, 15. This will protect you in the event you are wrong. And people are usually wrong. We're all wrong at certain times. It's just part of life. Right? What do you think? Paper doesn't talk. I don't understand this. I thought paper confusing. So market capitalization is. Just dropped my microphone. This is not getting edited. Not today. So market capitalization is important because you want to be in liquid stocks. Liquidity means a stock that has a market cap of more than $1 billion. They tend to be more liquid. Look at the daily trading volume. Look at the bond. Is it liquid? Could you get in and out? Not today, presently. You might want to consider the future liquidity of it. So think about liquidity. People lose money, one, on allocation size, too large without scaling in. Don't know that. Market cap, they can't get out when they need to get out. Those are probably two of the bigger ones. Do not trade. Trading is dangerous. In and out, unless you're a professional trader or have a mentor, do not trade. You could trend file, like on TradingView, use the super trend. It's great over a 4-hour chart or daily. That works well, but otherwise, you're playing with fire. We all know that. Leverage ETFs, avoid them. You lose 50%, it takes 100 to make that up. With a leverage ETF, it's going. So you go down 8, you got to go up 8 point whatever to make it up. You go down 15, you got to go back up 17, 18%. And if you chop all day like that, you're going to end up with 0. Selling. Do not sell when you feel like selling. You gotta have a plan. Go in with a plan. When to exit plan. Are you exiting because management changed their outlook, the guidance? Like, why are you selling? It's all about planning, and do not sell at the bottom when the most fear is in the market. That's when you want to actually be buying. Then what type of investments? Well, one, avoid options. I should have had that written on this. Options are something, unless you're mentored, and there's strategies you could use like covered calls that work quite well with less risk. But overall, options are like a lotto. You scratch off, there goes your money. So anytime you buy options, think about that. So this is a quick way to ensure that you're preserving capital. A great website. I mean, it's Special Sits Research. They'll help you out, and if you're into doing heavy due diligence and research. Another one I like a lot is newconstructs.com. But the fact is that won't make you money. They could say that they'll look at like whatever. NVIDIA, well, that probably wouldn't. Or I don't know. That's a good, like the shippers. The shippers right now have like a book value of 0.5, high ROA. Well, you go to new constructs, it may say, well, based upon this criteria, that criteria, in order to realize that price, the stock has to grow at 20% for 100 years. So it'll give you a good idea of valuation, but it's just another tool. So that's basically it today. I wanted to get into what not to do in 2023. So I'm going to recap. Allocation size. Do not put too much too fast into any one investment. Make sure it's liquid, large enough size. The market cap is critical. Stay away from leveraged ETFs. Do not sell emotionally at the bottom. And it feels like the bottom to you, then it probably is because all your neighbors are selling too. Understand your type of investments and invest in the cycle. Currently, we are in the first stages of a potential long recession, just sentiment is horrible, housing is turned, so we could curve out of this, but sentiment leads and it's not looking good. So currently you would probably be scaling out of certain stocks, maybe even considering getting a great watch list of what to buy or slowly scaling in. When I say scaling, say you have 100%, $1 million scaling in, do a half a percent, 25 basis points, a small amount. And yeah, so you want to invest in the cycle. And so currently the easiest thing to invest in today is you buy government bonds, you buy municipal bonds. You could get above 4%, 7% in certain situations with very little risk. So you just gotta invest for the specific market cycle. Well, I appreciate your time. Thank you for support. Reach out to me with questions, and as this continues, I'll get a little bit more acclimated, more comfortable in front of the camera, and I want feedback from folks so I could add value. My goal here is, one, is to educate, also to have ideas, but also probably more than anything is for people to think about like themselves and what they want to do with their financial future and how to go about it best. Peace out. This is Green Bicep. Thank you for your time. Cheers.